Before we talk about uranium and agriculture and gold and silver and everything else, we're going to talk about bonds, because on this channel, we understand how important the bond market is, because the bond market is the debt market, and the debt market is collapsing. And when your economy is a debt-based system, then the debt market, it turns out it's pretty important to watch, right? You understand? This is going to break. I'm calling it right now. It's going to break. And when it does, markets are going to collapse. So with that being said, how does that impact gold, silver, and all of our commodity stocks that we love so much and that we really focus on this channel? Well, here's the deal. You get a big enough sell-off in the broad market, everything's going to sell off. It doesn't matter how bullish uranium is. It doesn't matter how bullish gold or silver is, or how bullish they are. You get a broad enough sell-off, you get a liquidity crisis, and everything sells off. It's going to be bad news bears, okay, because everything's going to sell off. So in the event that something like this does happen, it's all about being mentally prepared. So when it does happen, when it does roll over, you say, okay, everything's going according to plan, right? We knew this was coming. We're not shocked. We're not getting scared out of our position. We're not freaking out. We are aware of the situation in advance, okay? And that gives you a strategic advantage to hold your position. And more importantly, B, have cash ready to buy. Buy where? Buy on levels that you foresaw being strong levels to buy at before they happen. So when the price gets there, you're already ready to strike. What could happen, we're going to go back to the Bitcoin chart, all right? Because I've actually showed you this before. If you want to learn how to do technical analysis, there's nothing better than crypto. And there's so many examples of technical patterns taking place in crypto. But one we're going to look at today is actually the Wyckoff, okay? So this is what happens. You break up, you come down, you retest here, and then you take off, all right? And you break down here, you come down to the original breakoff spot, right? If you want to see other places where this has happened, look at BHP. I already marked it up for you. Look. What does that look like? It looks just like the Bitcoin chart we just looked at, doesn't it? But guess where else you're seeing it? Seeing it in uranium. Look at this. This is called distribution. I've been talking about this since back here, right? I've been talking about these upper wicks. They do not look good. This is scary. You're obviously reaching resistance, and every time we get up here, we sell off. If you look at the hourly candles, the market opens with strong buying and ends the day with strong selling. This is clearly distribution. Distribution is another way to say selling. This is institutional selling. So for all the nonsense you're hearing from all these, permanent bulls in uranium, you're getting selling from institutions, okay? Being that I have experience with it, I'm able to see that in advance. As of right now, I'm not buying anything. I am absolutely waiting. The bond market is responsible for all of the red you're seeing today. This was a predictable event. It's not over yet. It's not going to stop until the narrative changes from the Federal Reserve or a stock market crash large enough that it forces the Fed's hand. We will likely kind of come down and retest and just roll around for a bit. I think this is accumulation, and it makes sense. This is why Wyckoff was so important, not only to tell us what the sell-off would look like, okay? It's going to come straight down the way it went straight up, right? But also because once you finish Wyckoff, understanding what it fundamentally represents in the first place, you know what happens after Wyckoff, right? And that's accumulation, right? So you need to be buying down here for sure. That I think this is ultimately just a setup, all right? I think this is just a setup to come touch something like the 50, all right? And then you will likely come back and double bottom, all right? All right, and this is why I encouraged a bit of a swing trading or, a reallocation of funds once you got up here, right? And this will kind of flush you up with cash, kind of, get rid of those weak bags that you might have, those bad decisions, and get ready for the potential that you might come back down. Again, I'm going to keep reinforcing this. Adding cash, holding it, being patient, using these up moves as an opportunity to reassess your portfolio. Should you be here in the first place? Do you have things that you made a mistake on? Do you want to reallocate your funds? Take a small loss maybe and just get ready for the next leg down? That's what I'm doing. I have sold half of the things that I bought down here where I said I was going to buy. I have now flipped for a profit. And I have even more cash than I started with coming up from the sell-off. And I am ready to deploy that cash if we come back down for this retest. And I feel very, very convicted about that move. I just see it happening. I can just see it happening all day long. I still think you come and you put in a double bottom or something like it. I just do. Maybe it doesn't happen. But again, if that happens, you need to buy aggressively. I think that the broad markets have a really good shot at just taking one more week down, right? And just flushing out another 4 or 5%, touching those key levels. And this little run right here will give us the cushion we need to sell off with the broad market. And then you can come back for this retest. And if that happens, if you can get that kind of confluence, if you can get the S&P to hit 3,600 and the Dow to hit what, like 30,000 or whatever it is right there, the same time we come here on next gen, I mean, that is just the most bullish buy of all time. Holy moly, what a day in the markets. This is actually one of my favorite days in the markets of my entire life. I'm going to tell you why. Don't skip ahead either. I'm going to show you something. We've been talking about the broad indices coming back to these February 2020 levels since I started this channel. In my very first video, I was saying, look, that's the bare minimum where we got to go. It just made sense. It's logical. It's rational. Meanwhile, on the S&P, a perfect rest on the 200, which is what? Just a few points off of this 3,600. That was our first spot on the S&P. That was our first spot. 3,400 is better, but we knew 3,600 would be crucial. Came down, kissed the trend. That's where it rested. In confluence with everything else. In confluence with everything else. All right. Holding up a little stronger. It is than Cameco, but it's in the same place. It's just above this double bottom. Just above this double bottom. And that's the pivotal moment. The pivotal moment. That's what you're looking for. It's that double bottom. So you might not quite get it. Remember, I talked about this so long ago about how uranium like to put in double bottoms, and it likes to put them in as a slant too. You see how they slope up? The right side usually a little bit higher than the left one. It likes to do that. You're getting what uranium does. You're just getting it. And the key takeaway here is that all of this stuff is happening in confluence with everything else, right? So this is what you have to trade. This is why I've been pounding the table about this moment in advance, so that when it happened, you would have the confidence to see it, recognize it, and strike, knowing what it is and where it would go next. And by the way, you do know where it's going to go next. So let's say, for example, you get a double bottom. This applies to gold, silver, whatever. We're just using the Cameco chart because it's so clean. You measure this. You come down. All right. Here's how you're going to play it. All right. Let's assume I'm right. Let's assume we get a bounce here, okay? Here's your test. It's right here, okay? This is your double bottom pattern. When you get here, I don't care what it is. If we turn around and get denied, we sell. Everything we're buying right here, we're going to sell it right here, you understand? Or if we break, if we peekaboo and come right back down, we sell. You understand? It's just that simple. It's just that simple, because if the pattern fails, it's going to hurt. It's going to come right back down. Hell, it might even come down here. Okay, let's kick it off with Cameco. I am loving what I'm seeing here. Everything is on point. Nothing has changed. Congratulations to everyone who's been accumulating in what is clearly a bull market. I mean, you have had a sell-off in what is clearly a bull market. And it's just so obvious to me. And it's unfortunate that so many people are getting scared and shaken out here at these really strong levels of accumulation, which is exactly what it is. Do you remember when I first told you, when we first started selling off, I said, well, what's next? I said, well, what always comes after Wyckoff distribution is what? Accumulation. And I told you to be accumulating all along this thing, didn't I? Go back and watch the videos. I told you, and this is exactly what's happening. The leaders are showing some short-term weakness and are having a little bit of trouble getting up here and are not necessarily making the best patterns. Meanwhile, you are already reaching our goals, our targets, okay, and several others, right? Energy Fuels, Global Atomic, Encore, Forces, there's several others, right? You're there. And so the point is, maybe you consider taking some profits here. Especially if you have, if this has been a pain trade for you, or, you know, if you bought down here with me, right? If you bought on this trend and you're in a more of a swing position to see how it goes, then by all means, consider taking some profits here. If you just zoom out, these are parallel lines. This is a bull channel in Cameco, all right? And this is telling you that it is still in a bull market. Even if it sells off 50%, it comes to this trend. As long as it's in the trend is your friend and the trend is up, okay? So That's what that tells you, and that's why it's so important, and also because you can find it in Confluence, right? This is the same kind of parallel channel. This is a bull trend in a bull market, and until that changes, that is the fact of life. Well, guys, I hope that this was helpful in proving the validity of technical analysis when done correctly, right? And obviously, to do it correctly, you have to lay it on the backdrop of the fundamental situation, whether it's the broad market, whether it's the macro, it could be geopolitical. There are a lot of things to consider, but the charts are certainly an element of that, right? They're a tool in the arsenal, and it absolutely works. And dismissing it out of hand and saying it doesn't work, it's absolute nonsense and foolishness. I think the people who say that kind of thing to get something so obviously correct, so blatantly wrong, what else are they getting wrong, right? I mean, this is really egregious to dismiss technical analysis. It's really foolish. And so typically people who dismiss technical analysis tend not to get too much attention from me because, again, if you get that much, something so simple, so wrong, what else are you getting wrong? And I like to limit my sources. It's like Warren Buffett and Charlie Munger say, it's like, we tend not to invest in more than 10 companies because it's hard to find more than 10 good companies to invest in, right? And diversification is a hedge against ignorance. Well, whether or not that's true in the markets, I can tell you it's true with sources, right? I mean, it's hard enough to find one or two good sources. So anytime anyone gives me an excuse to get rid of them as a potential bad source, I absolutely do that. It only takes one bad apple to spoil the cart. And so I would just encourage you to get rid of noise. Go out of your way to whatever extent you need to do it to ensure that, you know, the only information that you allow yourself to take in is good information to the extent that you can control it. And certainly you can control a great deal of the information that you process. You really need to take the time to have the discretion and discernment to weed out the bad noise that's coming in. And once you get more and more good information coming in, it helps you to make more and more good decisions going out. So it's extraordinarily important to make sure that you have good sources. And, well, what's the best source in the world? Well, it's you. You are your own best source, right? This is why it's so important not to let yourself get spoiled with bad information. Otherwise, you will not be able to rely on yourself. So I'm trying to tell you, this is kind of a clarion call just to improve yourself. And right now it applies to technical analysis. And you don't have to like my video. You don't have to subscribe or do anything like that. I'm just hoping to plant a seed that might grow, that might help you be your best person. Starting here with charts and being an investor and maybe beyond that. But certainly it is a seed and it can be watered and it can take root and it can grow. And I hope it does because, like I said, I'm just a guy. Nothing about any of these calls that I made are special. Really, it just comes down to understanding the market and having the confidence to call it like I see it. And that's the big difference between me and most people. But you can do the same thing. I'm not selling anything. I never will sell anything. This is simply me putting out a message saying, look, you can do this too. And I hope you do, because we're all kind of in this thing together, right? The market is inherently rigged against us, us little people, you might say. So we need every tool at our disposal to beat this thing as best we can. So I encourage you to do that. Be your best person. Educate yourself to the extent that you can. Don't rely on these freaking experts, quote unquote experts, all the time. Use your own eyes, your own ears, right? And discern things internally for yourself. Deduce your conclusions, right? Rather than being introduced to your conclusions. Think for yourself. And the faster you do that, the more right you're going to be more often. Cheers, fellas.